Hi Mohammed, this is a video about trend lines for you, and I want to try and keep it as simple as I can, because I do have a habit of running away. I know I have this habit of sort of going off at a tangent, because when I look at charts I just see one thing, and that's my setups and how I would draw trend lines and three candle reversals and all that stuff. So in order to sort of simplify the trend lines, the line chart is the easiest way to do that. And if you were looking at this this reversal here, it's just a random reversal, doesn't matter how, where or whatever, and really the RSI histo would just always complement a valid reversal, three candle reversal. You know, that's how I came upon the RSI. Three candle reversals and trend reversals worked, and then I just happened to notice this phenomena with the bust, pullback, break and close, which combined with the breakout of price. So as price is forming from left to right, we are getting, in a downtrend, lower lows, lower highs and lower lows. But at this point here, all we can see is a lower high connecting a lower high with a lower low in between the two. High, low, lower high. And once that low is broken, that's a valid trend line. In my, according to my understanding, my rules. Now price has gone up, low, high, higher low, higher high. That's a valid trend line. And it wasn't valid until that high had been broken by price there. So if this was to continue up, that trend line then should act as support for the up move. As it happens, it failed again, and we cannot draw another trend line, valid trend line, until this low is broken, because now what we've got is a high. Disregard that little bit there. We've got a low, we've got a lower high, and until this low is broken we can't draw another trend line. But when we do, or when we can rather, is when that low is broken by price there. So price is in limbo at this stage. Bear in mind we are considering trying to get into the long move. Sorry, I should have said that at the start of this. We're looking for a valid trend break to the long side, for whatever reason. For, possibly there's support here. We're using this support here because that is valid support actually, and hopefully you can see why. Oops, where's that line gone? It's a bit weird. Hopefully you can see why, because once that high was broken by this high here, you've got a valid uptrend and it's broken through it. So that means that is valid support. So we're looking for either to attack this support, which once that low is broken, the candlesticks and the RSI could have got you into a move to, as you can see, attack that support level there. And look what's happened when it's broken the low of that with the trend high, low, lower, high, lower, low. There is a valid trend line again, high, low, lower, high. Once that low is broken there, you can then draw another valid trend line connecting that to that, and that's why price fell with the RSI. That's why when that level there was broken by price, you could consider shorting it, and by coincidence drawing the trend line at the very same time. Now all of that makes absolute 100% sense to me, and that's why, when I'm looking at this up move here and I see we've got a trend going down, I'm already looking for trades, anything that will get me into a trade. Now, for whatever reason, we could have got into a trade a bit early here because of the RSI histo, and potentially I should put the, well, I won't complicate things, put the RSI, I'm already doing it, I know what I said I shouldn't do. I'm trying to keep things as simple as possible, but hopefully you are understanding what I'm talking about. This trend, this thing here is a valid uptrend because you got 1, 2, the minute that high was broken, that is a valid touch point. So you could have drawn that uptrend to connect those two levels the minute that one was broken, and then obviously that uptrend still remains valid, and look how price has respected it all the way up, and that's a valid touch, a new valid touch point there, because that high is broken by that. All I'm trying to do here is show you what is a valid trend line, because that's what you've said you've got a bit of a confusion with. I did actually, what we should do is I created a tweet somewhere, and I'll look it up, where you can download the software and produce your own videos. And what you ought to do is actually, or what you can do, is produce a video and set up your own YouTube channel. You can make it private if you want to, and fire up a video and tell me where the problem is, But anyway, I digress. Anyone can do that. I'll retweet the link to the videos, and if anyone's got any problems, they can produce them, because it's not just you, Mohammed, that potentially will be watching this. So, when we're looking for this reversal, so as it is, we've got all these levels, and this is where I'm different, or my method is different than most other people's trend line drawing levels, is that one that connected that and went down to there, price has pulled back, but we can extend that. Well, we can extend it from the start, because it's a valid trend line. So wherever that line goes, even if price pulls up through there, it's still been respected. So that's a trend line break at this point here, low, high, higher, low. That's a valid trend line there the minute that high is broken by that. So that's a valid trend line. Then price has continued up, and that's a new valid trend line, because that high there has been broken by price here and gone up and continued. So this is how I'm continually seeing when trends are broken. That's broken down. Now there's nothing to say that price there wouldn't continue on down, because we could have extended the trend line from here across here and all the way over to there. And as you can see now, we've got a new valid trend line formed once that high has been broken by that one. So then we can tighten this one up to that low there. And the reason we're doing that all the time is because that then gives us, it's much the same really as using EMAs. Sorry for people all tweeting me and stuff, not tweeting, texting me. But it's, you could say I'll just throw the MAs on there, but the MAs are lazy. What MA do you want? The MAs will do this naturally. All this process tightening up these trend lines is really what the moving averages are doing on the different periods. So one is like because from here to here is however many candles. We can count the bars there, but we could see it by using this. So there's I forget which one's bars now. That one, the first number is the bars. So there's 13 bars there. So you could say that's the 13 moving average. And when you get up here, that will be the 29, 30 moving average, whatever. So all we're doing is manually creating moving averages by continually changing where these these trend lines need to be. So it's really not as complicated as made out, but the difference with this and moving averages is that we are, we're learning, we're physically doing stuff to the chart, which is why I hate moving averages. So this remains valid all the way up to there, and as it happens, we've got another touch on it. That's so it's no coincidence that when price has pushed back to this level and gone up and created and done its stuff, it's come back and tested it. But we have been allowed to think about getting in earlier because we're following the moving the trend line, correct trend lines. That one's there, and then as prices drop below it, because we're moving left to right, we can then redraw it because that's a new valid touch point there. This one has been wiped out by price moving down, but that high is broken by price just about there. That then becomes a valid touch point, and as such, if we got a trade signal here for whatever reason, this and this, we can enter, because we're not trading into that. We've validly broken through it, preferably with a close and a 2B reversal on the lower time frames, and that's how we get into these trades. Okay, that's a valid downtrend line there, high, low, lower, high, and we can sing the final bit of the song, lower, low. If we can't sing the lower, low, all we can sing is low, high, low, lower, high, but not lower, low, then that is not a valid touch point. There, that becomes valid when that's broken. As such, then, when that's broken up to the upside with the RSI histo break and close, then there's a valid trade there, because providing we've got a trend in place as well, in which case we haven't, but that could have been a massive spike there. That could have been a perfectly good trade there, but then again we'd want to see some sort of target area, which is a valid area of resistance that has created the high, low, lower, high, and we've got to sing the lower, low bit. Okay, so I don't know where I'm hoping, because it is very simple. Maybe it's easy to overcomplicate this stuff. This is a valid trend line. This low must be broken by price, and when it does get broken by price, high, low, lower, high, remember I said lower, low, that becomes a valid possible trading point, and there it is again, the RSI histo, bust, pullback, break and close down, and this has been broken finally by price here, not there, notice, that becomes a valid trend line. And the only real reason we're drawing that is A, to see if we've got a valid 1, 2, 3 reversal, 1, 2, 3 lower high reversal, should I say, and that wouldn't be a 1, 2, 3 lower high reversal until that level's broken there. So regardless of whether we've drawn that, but we draw that to see whether we can break up as well with a valid trend reversal, and that would be something that follows this route here, low, high, higher, low, higher, high, break of the level, that's there. That's not a valid trend line until that high is broken by that. And it's the line charts give us the close of the price, so that could be a higher high on a candle high. I'm not going to look at that because it complicates matters, but it could just be a spike, whereas these are the EMA 1 with closes on them. So we're always, by drawing these, we know when we break it with a valid reversal down, we've got an opportunity to look for a trade, and lo and behold, there's a valid reversal there. Price pulled up, and there's no valid swing trend there because that hasn't trended up. That is just a spike up as shown by the RSI, and then boom, down it goes again. And we can draw a valid trend line here, high, low, lower, high. Finally, you know, you can connect that when you can sing that lower low song. There. And as I said, that's the spike up, one swing, no trend, and then down it comes, and it's absolutely crashed. So I'm hoping that that has described why we draw trend lines, how we connect the trend lines, and how they can help us see which way price is going. Okay, Mohammed, I hope that helps. Any questions, feel free to ask. DM me if you need to, if you prefer to do it in private, and hopefully we can clarify that for you. Thanks for watching, everyone. Have a good evening.